Hi everyone, this is Rob Roy and welcome to the Elliott Wave Options U.S. Market Update. Well, following a brief pause to correct its overbought condition, the SPY appears to be continuing its march back up towards that 161.8% extension in the 420 area. 2 recordings ago, I showed you an Elliott Wave consolidating triangle in Bitcoin and asked you to post what direction you thought it might break. Well, Bitcoin made its breakout. But now, where does it go from here? Let's take a look at the charts. At the time of this recording is a little after 1 a.m. on Sunday night / Monday morning. Hopefully everybody got an opportunity to spend some quality time today with your significant other. Happy Valentine's Day to everybody. At the time of this recording, the futures are up about 15 points, pointing to a slightly higher open. But remember, the markets are closed on Monday for President's Day. And while I'm reminding you about things, please don't forget to hit that like button, or better yet, hit subscribe, and you'll be notified immediately when one of these videos is posted. All right, taking a look at the market, as I mentioned in the intro, we are starting to put some distance from that 381 level as we continue the march up towards this 161.8% extension around 420. I also said in the intro that we had paused to correct a slightly overbought condition. That's where we look at the 10-day moving average, and you can see right here, a little bit of a sideways move there for 4 days, and then closed higher at a new closing high on Friday. That surprised me just a bit going into the holiday weekend. Doesn't seem to be any concern about pairing off or squaring positions moving into the longer weekend, as we've seen in the past with extended weekends. So that's about all we can say about the market at this point in time. Let's take a look at the dollar. In the last recording, we talked about how we were moving up in this zigzag pattern towards this 100% extension. And it's really classic Elliott Wave Fibonacci stuff here, except for the fact that we didn't actually touch that 100% line. I know it may be a little picky. It only finished 19 basis points short, but usually those lines actually get touched, which makes you wonder, is that upward move actually over? Well, the market moved lower. You can see we're below all 3 of the major moving averages that I look at, the 10, 30, and 50 exponential moving averages. So if we are going to try to come up and actually touch that line or potentially extend in the dollar to 161.8, we would need to break back above those moving averages pretty quickly. Otherwise, it appears perhaps the wave 5 is underway as the dollar would move lower. Taking a look at the interest rates again. They had their breakout from the triangles that we talked about also in the last recording, whether you drew this as symmetrical or descending triangle. We broke out, we came back, we climbed right back to the breakout point, retraced the breakout, exactly what Elliott Wave triangles do, and now we're making our march up towards that wave 5 high. Now note, the 10-year is in a wave 5 pattern to the upside. The reason I note that, so we take a look at the 30-year, and the 30-year is in a wave 3. So 10's in a wave 5, 30's in a wave 3. Does that make any sense? Well, I think it's time that we took a look at that 10-2 spread again that we've talked about in the past. So here's that 10-2 spread, and we were over here with this big vertical move here. We started talking about this way back in this area when it was at about 70 basis points, the spread. Then we had this vertical move. We said that was a bit vertical, so we corrected that, went sideways, a little bit of a corrective move lower, and then look at this spread widening to the upside. So let's go back and take a look at the 1030 again, asking, does it make sense that the 10-year appears to be slowing, or at least running to a wave 5 completion, where we have the 30-year that is climbing in a wave 3. In fact, when you look at this, you can see that we have a really nice zigzag pattern here forming in the wave 3 in the 30-year. While I'm at it talking about the zigzag pattern, we're about to start our educational web series on the zigzag called Zig-Zag Mastery. If you'd like to learn more about it, zigzag's my favorite directional pattern. I like it even more than the 5-wave Elliott Wave patterns because of this right here. You can find zigzags in wave 3s to trade. Go to our website, ewotrader.com, and you can find out more information on that web series if you're interested. So it does look like the 30-year wants to continue higher. So the widening of the 210 spread would make sense If we're seeing that spread widen, why wouldn't it widen between the 10 and the 30? In other words, maybe the 30-year has further to run than the 10. Whether you're holding a treasury bill, bond, note, whatever, if you're holding it for a longer period of time, you earn more money. So it does make sense that the 2-10 yield is widening or separating even further. That's what's going on with the 10-30. And that does make sense. Back when we had the inverted yield curve, that's when you were actually getting more money for a 10-year versus a 30. So you were getting paid more for holding a security shorter term. That's why we know things are out of whack when that occurs, because that makes no sense at all. So things are lining back up the way they're supposed to, and it does look like further move to the upside in the 30-year. What's that going to do to the housing market? Is that going to kind of stop it in its tracks? It's been awfully hot lately. All right, now let's take a look at Bitcoin. 2 recordings ago, we talked about how we had this really nice symmetrical triangle forming here, and then it morphed into a little bit larger triangle, and even in the larger triangle, kind of gave us just a bit of a head fake here, breaking below that lower trend line a couple times, even closing below it once, but the big breakout move was to the upside. Now when we look at this, it's about as classic Elliott wave pattern as you can get. We have a 38% Fibonacci wave 4 correction. When you have a 38% correction, you look for a 61.8% extension. So you can see the wave 5 at this point has extended 57%. The wave 5 target, which we've been talking about for quite a while on Bitcoin, is 52,000, which is going to be right exactly where that 61.8% extension level is for this wave 5. So what happens once we get to that 52,000 level? Well, we look at our confirming indicators to see where we go, and you can see at this point we are starting to have the ADX move back to the upside, indicating that there is indeed strength to this move. The only negative here would be the fact that while Bitcoin was going up, the positive directional indicator has been going down. So perhaps Bitcoin rests a bit at the wave 5. Once we actually reach that target, we'll come back and analyze these confirming indicators a bit further. I also like to look at the CCI for short term, and it's not exactly at its top, so there's room there for it to go up and hit that 52,000 level. But once again, the current momentum is to the downside, even as the last couple of days were to the upside in Bitcoin. So it doesn't mean the upward move is over. It just means that maybe this move needs to consolidate, just as we consolidated that big move up in the wave 3. Looking at silver, you can see silver has moved itself back into a really nice ascending triangle pattern. Looks like silver wants to make another break. Where will it go, to the upside or the downside? That's why we put our strangles on, so we don't have to pick a direction. Doesn't matter which way it goes. When we look at gold, gold is not performing anywhere near as well as silver has. In fact, silver is back down, or excuse me, gold is back down here towards this level about 170, which is below the level 175, which we've highlighted numerous times, which has been a point of support resistance for basically 6 months or so. So it needs to hold this 170 level to see if it breaks back to the upside. Now, I've been mentioning for a while that silver has taken the lead over gold. Why isn't gold performing as well as silver? A lot of people think that some of that money that would go into gold has been going into Bitcoin. And I think that's true from a retail standpoint, possibly even an institutional standpoint, which we now have a few vehicles to trade Bitcoin, BITW being one of them. However, I don't think central banks are buying Bitcoin, and central banks are very heavily involved in gold. So maybe it's some sort of an influence, but I don't think it's enough to keep the whole entire move of gold to the downside. So what are your thoughts on gold? Post us a comment and let us know if you think gold is going to break to the downside due to the explosive move higher in Bitcoin, or if gold finds support here and begins to move back to the upside and catches up with that upward move in silver. Last but not least, as we always look at the VIX, and you can see we're trying to break down again. So here's this area around 22 that has been support for a very long time. We broke below it, tested the 20 level back at the end of November and early December. Here we are again testing the 20 level. And as we've noted, if we break through that level, that may give the market enough momentum to go up and hit that 161.8% extension, possibly fill this gap in the VIX chart. But we also have to respect the fact that this has been support for quite some time, and the potential for a bounce in the VIX and more volatility stays. But for now, the charts seem to be lining up to where they make a lot more sense with the bond market and the equities market. Hope you've had a wonderful week. Back to talk to you again soon. Take care, everybody. If you like these recordings, I'd like to invite you to join our new Trade Finder Live, where each and every week we do a live webinar where we talk about the market, but we also go a little more in depth into the technical analysis system that we utilize to forecast where the market's likely going to go, and also to identify trading opportunities. Get your free subscription today. Take care, everybody.